Good morning. I'm Marv Eisen of Timeless Dollar, and today is Wednesday, May 11th. We start out today looking at the economic calendar, and I note that the Consumer Price Index, the year over year, is going to be announced at 8:30 this morning. Now, last month's forecast was 8.6%. This month, the forecast going forward is 8.1%, coming down, so we expect the announcement to show a number around 8.1%. If it's lower, that's even better. The Consumer Price Index is a measure of the inflation rate. And so we want to see that inflation rate coming down, and that's going to be good news for the stock market. So we'll see if that happens and if it does. The news of the day, and I'm looking at my CNBC website, flags are generally in the green, although that can change. It's healthy in the green, NASDAQ futures. The market expects the Consumer Price Index rate to show inflation has peaked or maybe even coming down a bit. So we'll see about that. Moving over to the big picture, and I want to go over the big picture of the S&P. This is the S&P one-day chart. This is the S&P one-day chart. Here we are. Yesterday, the market closed at 4,001. And we see that we've come down from 4,800 at the end of 2021. Pretty significant drop, right? But let me point out something to you. Let me point out something on the big picture. Going back to January 2021, okay? The market was trading at 3704 and went up to 4,800 for the year. Pretty good, right? That's a 30% increase, 30% increase. That's not sustainable. That's just ridiculous, not sustainable. So let's go to where we are now. If you purchased the S&P index back in January 21 at 3704, and now you're sitting at 4001, guess what? That's an 8% increase. So 8% increase, that's the market historical average, right? So the market is not crazy. 30% annually, that's crazy. So now we're back to normal times. So everything evens out in the market. Looking at the one-day chart, this is the three-minute chart of the E-mini. Yesterday, May 10th, and I have my two features on my chart. I have my trading zone that I calculate each day, and I have the previous day's close, which is an important level. So I have three important numbers on my chart, three important price levels on my chart each day. I have the previous day's close, and I have the resistance and support levels that I calculate using the trading zone calculator that's based on Taylor's book method. It's not a wild-ass guess. It's an actual calculation made up of 12 different numbers, and those numbers come down to averages, and then we average the averages. And this number is unusually accurate. If you want to know how to calculate it, you can take my course at timelessdollar.com. I'll show you how to calculate it. It's not an easy calculation. Or you can buy the book, Taylor's Book Method. You can get it on Amazon. Difficult read. And or to make life simple, you can just go to my website at timelessdollar.com. And under E-mini courses, you'll see daily trading zone subscription, so you can get it over there. The subscription is monthly. You can cancel anytime, and the first week is even free. So how did the trading zone serve as a guide yesterday? Well, prices gravitated around my top number, the resistance point at 40.33, closed the gap. Now, the gap closes 70 to 75% of the time. It's a very good trade. Not necessarily closes all the time. That still leaves a 30% chance it's not going to close, but as the price moves closer to the gap, the odds increase, right, that the gap will be reached. Now, this is a magnetic line. Yesterday's close, the previous day's close is a magnetic line. It pulls prices to it. When prices open significantly above or below that level. So prices stuck around that level most of the day, and then the intraday low is put in. We always want to know where the intraday high and low is. The intraday high being right at the start. Okay, it tested it at 10 o'clock, but then came down, filled the gap, found the intraday low right over here, just about 12:30. We always want to take note of where the intraday low is in relation to our trading zone. And then the market As you can see, the lows, we had higher lows, so it's a pretty good guess that the market was heading back up. Certainly heading back up to the previous day's close, that would have been a good guess, but as it moved up in a momentum move, lasting over a half an hour, that was a pretty good trade as well, if you caught that. Notice that the price hit its head against the calculated resistance. Gee, that number comes up and market seems to recognize it, right? So this trading zone is an important number. It's an advanced technique. If you want to know more about it, go to my site at timelessdollar.com. But today, where will the market trade? Well, I have my trading zone drawn out, and I don't want to divulge it because it's available by subscription. You can get it at my site. But it does look like the market is going to open gap up. Now, if the Consumer Price Index, which is going to be announced shortly, probably before I get this video up on YouTube, prices might not drop back to the close of today, which was right over here at $39.95 or thereabouts. So anyway, we'll see what happens today. Hopefully the market will get a kick in the pants from the Consumer Price Index coming down, and the bulls will be happy, but it's going to be a day for trading. So keep your powder dry, use a lot of patience. Thanks so much for watching, and I'll see you in my next video.